Support for the show comes from Capital.com, a global investment platform that is becoming local by setting up offices in Dubai this May to serve their customers more. This means Capital.com will be locally regulated and will provide local banking solutions. If you are new to investing, you can check out Capital.com's website for all the learning material. And if you are an experienced investor, you will benefit from the news and analysis to make informed decisions. Check out Capital.com and start investing today.
In the region, I think we have the best region right now to start companies. We have a combination of a very young market that is developing extremely fast, is thriving. We have governments that are extremely supportive of the ecosystem, building companies, building new industries, developing the ecosystem. And I think there is a lot of things that we will see coming up in the next couple of years. And we obviously, otherwise we wouldn't have started here in the first place, are very much convinced that we can invest in companies here that will be very successful.
Hi, everyone, and welcome to Conversations with Loulou. My guest is Jonathan Doerr, the co-founding partner at Antler for Middle East, North Africa, and Pakistan. Antler is the world's day zero investor. What does that mean? It means that they help founders find co-founders and partners, and they provide them with guidance and funding so that they're able to take an idea to a minimum viable product. Before Antler, Jonathan had leadership roles in Rocket Internet's Jumia, which is a leading online marketplace in Africa, which IPOed on the New York Stock Exchange in 2019, and also in Daraz, which is the leading online marketplace in South Asia, which was acquired by Alibaba in 2018. Jonathan and I are going to talk about his journey. What are some of the learnings he got from Rocket Internet? What are some of the learnings he got from working in scale-ups? And also how he's helping entrepreneurs in this part of the world build the next unicorns. Jonathan, I'm so excited to have you here.
Thanks for having me.
Obviously, we're going to talk about all your career achievements, and you've done so much already, but I thought maybe for those who don't know you and those who are potentially applying to Antler and would like to get to know you a little bit more on a personal level, what are some things that maybe you'd like people to know about you outside of your professional experience?
Yeah, so I'm originally from Germany. I studied business in two different universities and started early. End of the 90s, actually, I started building, that was still in school, and I started creating websites. So in 98, I think I created my first website. We had internet just, received 1 year before. And I was fascinated by being able to create something on my computer that I upload and the whole world can see it. And then during my studies in 2004, I started making money with that. So I built websites for law firms or people that worked with my dad or whatever, and they needed a simple website. That was what it was at that time. So started building website, HTML, Flash, was very fascinated by it. And I always knew there needs to be something that has to do with internet that I want to do. I studied business then and also did my PhD in Germany. During that time, I was always stayed very close to internet and website building. And I always knew I want to do something a bit differently. So for example, why did I do my PhD? I worked at that institute for quite some time, new media and information systems. And one of the reasons was that I was always on the search for something that is not a typical just consultant job that all my other friends were taking after their studies. And I was always for that search for something different. And then after my PhD, I joined a big company in Germany for e-commerce, and it was a corporate, and I felt very quickly that this is not my world. Till that point, I hadn't figured out what I really want to do and what I want to do differently. And then I joined Rocket Internet, and then I moved to Nigeria. And I think this is the day when I landed there where I felt for myself that I have arrived in what I was seeking for such a long time. I think developing countries and that atmosphere around me where everyone wants to grow and to achieve something and to do better than the generation before completely inspired me. And I think that's something where I knew now this is my thing. And till today, I haven't returned to Germany. I think there's a reason for that. So to the question, what drives me, I think it's what I love is progress. What I love is when people want to build something. I love building things. I love energy around me of people that motivate me, that where I can learn from and where I can build something. I think that's something, obviously it's very business related on the one hand side, but it's also something that drives me in my whole life and my career. You can put that literally above or below everything as a base for everything.
And that's why I thought it'll be amazing to have you on the podcast, because the experiences that you've been through are incredible learning experiences that I think a lot of people can benefit from. And maybe let's go back to those days in Nigeria. So for those that are not familiar with Rocket Internet, can you maybe just, because they're not as active today as they used to be. Yeah. So can you just tell our audience like a little bit about Rocket Internet, their philosophy and how they work?
I try to put that as best together. But so originally founded by the Zamba brothers, so three brothers. CEO Oliver Zamba was early known in Germany as one of the early entrepreneurs there. They built Alando, which was a kind of a copy to eBay, sold that also to eBay in a short period of time. And from there on kind of developed e-commerce models. Overall, I would describe them, Rocket, and at that time, that has changed over time, but at that time also when I joined, almost like a company builder incubator. They were present everywhere in the world except China and the US. And the idea was to say, what kind of business model that exists in other markets, obviously in the internet space, US or somewhere else, can we actually build and around the world. My model, for example, that I joined was e-commerce, so classic e-commerce model like Amazon or Souk here back in the days. And the idea was to say, like, so Rocket in itself, especially with Ollie, they were very, very good in raising money from investors from all over the world and then implementing these businesses. What they mainly did is found amazing people that want to build something. There were a lot of ex-consultants or ex-investment bankers, people that worked maybe already in the startup scene. So people that were very ambitious, very young, hardworking, and fit maybe in that category very well, and said, okay, I want to build a business with Rocket Internet. For example, Jumia, the Africa e-commerce platform, was then established with various people on the ground, and then obviously teams were hired. And I think what was very unique is then building obviously a local team, but having a central competence. So for example, there was a huge marketing team in Berlin that helped then all the companies around the world to do online performance marketing in the best way possible. So you had kind of your companies around the world, Jumia, as I said, in Africa, or Daraz in South Asia. And you have people that are very ambitious, that want to lead these companies that you hired, and then you build these businesses with people on the ground and central teams. So it's a combination of that kind of central knowledge and that you obviously also can share between countries. So that's how I would kind of describe a little bit at that time how that went. Lazada is a famous model, Daraz, both were sold to Alibaba. What Ollie did is like with Rocket kind of writing the first checks for these companies and then finding relatively quickly investors that partner up. So for example, in Africa, we had MTN, one of the biggest mobile operators in Africa that invested money. We had Ooredoo investing into this business. So there was always partners and big investors that helped then these companies to grow and then hopefully at some point also to exit. So I would say that overall is a bit the Rocket model at that time when I also especially joined it.
What I find unique also with Rocket companies is that there's always two people at the leadership. There's always like co-MDs or co-CEOs. Why?
I don't 100% know. I have maybe some assumptions. So
I mean, you were a co-CEO with Jumia, right?
And I think it had to do a lot with, I think also the regions that we're in and the speed that we were building.
Okay.
And the experience showed that the speed that Rocket built companies all over the world, like we were so fast in executing that maybe we tried just two to see, maybe one says, I'm not feeling comfortable or the region doesn't work for me, and then not everything breaks, you can immediately continue. Maybe that was literally that need for speed that we had. And we saw a lot of situations where then one of the MDs left or one stayed longer. So also for me in Daraz, for example, I stayed 4 years, we sold to Alibaba. My co-CEO actually stayed longer, just recently left, actually Daraz. So at the end, it worked out. It didn't always work out. Sometimes maybe also with the people that maybe didn't work well together. But I guess that's very normal. But I would assume that was kind of the background why they did that. Yeah.
And the idea of having people who are relatively young. I mean, I met quite a few people from Rocket, and they're typically out of a PhD or out of 2 years at McKinsey or something like that, or some other consulting firm.
Yeah.
So they're usually typically quite young, and then you put them in these positions of leadership, and you give them a lot of money with, of course, like the support from the central command.
Yeah.
So what works and what doesn't in this model?
Yeah. So I think what worked very well is that we gained that knowledge relatively quick. So the learning curve also I had in these, for example, first 2 years in Nigeria with Jumia was extremely high. The knowledge, also the interaction between the teams, not only locally, but also to the teams that we had globally, was just extremely, how can I say, like just fast moving and very natural. So it was not a corporate structure in that way. It was almost decentralized, but still centralized knowledge, or also centralized exchange.
Like centers of excellence, basically.
Centers of excellence. And it worked very well for that model. Also that you have young people that want to achieve something. Also people that say, this is maybe my chance into entrepreneurship. So there was also a specific type of person that was in that situation at the end of the day. I think that worked very well. Rocket was able to try a lot of markets, a lot of business models relatively fast. I think the speed that Rocket raised money, but then also executed all over the world and tried different models. Obviously, not all of them worked. I think was unseen, especially at that time, because everyone focused on like US or Europe and then China, but no one was in Pakistan, no one was in Nigeria, and no one was even in Indonesia at that time, right? So the challenges that I saw in the model, obviously, is that it is at the end when you build these companies. I think there was two major things that I would highlight is, at the end, you see that especially when the companies are progressing and getting bigger and bigger, is I'm not sure if you can take one model, e-commerce, and apply it everywhere in the world in the same way. At the end, you need to localize more and more. And I think that was one of the challenges. If you still have centralized functions, for example, centralized marketing, what do they really know about the sentiment in Nigeria, right? I think here the kind of centralization versus localization became a bit of a challenge, what works and what not. And then I don't know if this was a challenge, but I believe also when I think about being a founder today and investing in founders, the incubator model, where actually the people that came in, we were all co-founders, but what that actually meant is that we have a small percentage of equity. It was not that we owned that company, right? It was already owned by Rocket Internet and other investors. So we had obviously equity. Today, you would call us maybe more employees with a good
like
ESOP, right?
Yeah.
So that means you don't have at the end the 100% founder gene motivation to actually drive that business. Obviously, for me, it was the perfect entry point, because I was at that time, I'm not sure if I was ready to do the pure entrepreneurship by just raising money and building a business. For me, it was a perfect entry, I think, in a world which was a combination of entrepreneurship and being maybe in a organization more or less with money already raised and having already a salary. And I think short term, that was great. For me, it was definitely great to jump in. Long term for the companies, I think this is always a bit of a challenge, because obviously the incentive systems can become then quite disruptive at the end. And so I think these are the things where I felt when you compare it with entrepreneurship, that is obviously different.
Yeah. I'd also imagine, at exit, how do you decouple like what is centralized and what is decentralized? So if you're, selling a Daraz, for example, like if we go to your experience with Daraz, because you were in Pakistan and you were there at the time it was sold to Alibaba.
Yeah.
So how do you, decouple technology? How do you decouple central functions? How do you put a valuation on this business?
Yeah. It was actually from that point of view, it was actually not that complicated.
Okay.
Because it was actually quite structured from a contract perspective. So we were in 5 countries. So Daraz is in Pakistan, Bangladesh, Myanmar, Sri Lanka, and Nepal. So I was between the 5 countries, spent most of my time between Pakistan and Bangladesh. And when we sold it to Alibaba, funny enough, like from a structural perspective, the deal was relatively easy at the end. What was more complicated to actually then execute the deal in 5 countries that are not easy, I would say, from an admin perspective, to sell these companies. And obviously the structure in itself was still linked to Rocket Internet. So that was definitely a challenge. I mean, it's effort, and it took us quite some time. It's not impossible, but it was a lot of effort to go through that structural.
How was the experience of working with a company like Alibaba? Because I feel like most of the models that you copied, or I don't know, for the lack of a better word, localized, were mostly kind of Western models, right? So how was it to work with the Chinese?
Extremely exciting, and again, a huge learning curve. So what great to see when they kind of initially visited us in Pakistan and Bangladesh, it was very interesting to see how they assessed the markets, and they saw a lot of parallels to China 15 years before when they kind of started, or 10, 15 years before. Very humble in how they saw localization. And I think that was something that was extremely interesting, and also why they actually acquired these companies at the end of the day, because they said, when we acquire this, we will not change anything, because you run these businesses in the way that they belong into this country. You have all the knowledge here, you built them. They were very interesting, and they were very interested in kind of how we built the companies. We had in each of the 5 countries, we had individual teams. So at that time, we had around 3,000 employees over 5 countries. And each country had their own team. Obviously, there were some central functions. But me and the other co-CEO, we had at that time only a few expats, actually, a little bit in the central team, some in the local teams. And they were very local teams. And Alibaba was very impressed by that we had a Pakistani CEO for Pakistan, a Bangladeshi CEO for Bangladesh, and not just brought some expats and let them run the countries kind of. So and I think they were very impressed by that localization that we had at that time already. What we learned from them, I think one of the first things that we saw is that even though e-commerce is very complex, and obviously you have different kind of parts of the business, that technology is the one factor that drives everything in Alibaba. And that was definitely also a little bit of a shift for us, that technology comes always at the first position for everything, which was absolutely impressive. And we then pushed, after the acquisition, Alibaba to actually exchange our systems. And we saw a massive change in our numbers, like just purely thinking about a mobile app. We had at that time already 85% sales. We pushed that to the app, and how consumer used the app, because it was already with AI, completely personalized. And that drove a massive change in how our consumers used our app, etc. So that was one of the major things, I would say, that I was very, very impressed how much tech is in the focus of everything, and how it changed literally our business by purely exchanging the tech.
What else was there which was different from maybe a cultural standpoint, the way they manage companies and so on? The reason why I'm asking this, I mean, I recently had Ben Harburg, who's the managing partner of MSA Capital. You're probably familiar.
I saw that podcast.
Yeah. So he's very kind of like pro-China, and part of his view was that a lot of companies in the Middle East should be looking more at Chinese companies as an example. And you see that, for example, in how Kareem is building a super app, which is maybe closer to WeChat versus Uber. And he was very pro, like, looking east versus west in terms of the businesses that we're building here.
Yeah.
And that's why I'm curious, like, to know what your experience was, like, in terms of being through that transition from like a German to a Chinese company.
Yeah. No, that's it. I would actually agree with him. And to give a bit of an example, so obviously I traveled then to China, spent some time in Hangzhou on the campus. And obviously, I mean, everyone that has been to China knows that when you arrive in China, you realize that it's really a different world. And I'm talking now tech. Everywhere you go, you have like your WhatsApp and you have your Netflix, and you have like, we can go to South America or kind of North America or to Australia, wherever, like in Asia, we have kind of all the same, Europe, right? The same. But you arrive there and everything is different. And then you look at the systems, you look at WeChat, you look at Alipay and all these apps, and the way you communicate, the way you pay, the way you interact. And it's first of all fascinating how far ahead they were in so many things. When you try to, at that time, and that's like 5 years ago, when you try to pay with a credit card, everyone's looking at you and is like, why do you want to pay with a credit card?
You can't.
You can't. And it's complicated, right? So, and then what I saw when I looked at the apps, and I looked also how Alibaba kind of managed their apps and how they thought about it, I would say, and that's why I would agree with him, is that you can see that it comes way more from a world that I would see here versus in Europe or the US. And I think it has to do with, especially developing countries, we have like the technology came and we kind of jumped and leapfrogged to the next kind of to mobile, right? Most of the people, for example, in Pakistan or in the countries I operated in, they never used the internet on a computer in their life. They use it first time on a mobile phone. And I think that's kind of what happened to developing countries, that they did that jump from not brick and mortar doesn't really exist in that way. It's different kind of shop system and offline stores. And then you jump to mobile. So you have a lot of things that you don't have here or in China that you had in the Western world. And I believe that's where maybe that comes from, that the way of now approaching things is a bit different. And I think we see this now also with Jumia, for example, still struggling to really find its place, going through waves of changes. We also saw that with Daraz, that we changed many, many times the way to operate. And I think the reason is still that in developing countries, I still believe we need to find that perfect model for e-commerce, especially, which is extremely complex. And I think this is what Alibaba figured out very well. But what we also see now with Alibaba, now we thought no one can ever compete with them, maybe JD.com. But now there is new competitors coming up right and left, and they get into areas that Alibaba even has not thought about. So there is even a next generation of e-commerce now popping up in China. So that's why I totally understand that. I think especially developing countries are kind of using that technology to leapfrog their development and different kind of things. And we have a similar situation, I think, here, that we're now also jumping, I think, quite fast in development in this region. And that's why I believe we cannot just apply Western models here. We need to look in our own models or build our own businesses that work maybe only here, not in Europe or in the US.
So just to wrap up on that point, because you've seen the IPO route, which is the route that Jumia took to IPO on the New York Stock Exchange, and I think that went from like $1.5 billion to like roughly around 600 million today.
Yeah, and
sort of like the acquisition route. So you've been through both these 4 emerging markets companies. So is there a better option?
It's a good question. I think there is advantages and disadvantages in everything. So when we look at Jumia, for example, they IPOed first African company on the New York Stock Exchange.
So it's a good PR story.
It's a good PR story for sure. And it helped Jumia massively to continuously raising capital, which e-commerce is extremely capital intensive. And I think that's also coming a little bit to Rocket. I think without Rocket Internet, I think these companies would not exist today, because I think just a startup founder by raising some VC money, or I think it would have been not possible actually to build these companies in the first place. And I think that's a big achievement of Rocket. From an exit perspective, you have the IPO. In Jumia, they were able to raise, obviously, and still raise
196 million through the IPO. I'm just looking at my notes now.
Yeah. And I think over the time, the burn that went in there over the last 10 years, obviously,
is $1 billion. So when I looked it up, I think they had $1 billion in, or was it Daraz?
No. I think Jumia must have burned over $1 billion. That's
over
kind of
$1 billion.
Yeah. So, and obviously, I'm not surprised. When we think about e-commerce, right? You have the assortment situation, you have logistics. And you have technology, and then you have the payment, right? And everything is kind of a challenge. When we did Jumia back in the days, we had like 85%, 80% cash on delivery, right? Mm-hmm. It's a massive problem.
Which countries were you in?
Only in Nigeria. So Jumia was in it's changing also, but at that time in 12 or 14 countries. I was in Nigeria, which was at that time also 80% of the whole business, biggest economy in Africa. And so, yeah, very exciting, but payment, cash on delivery, massive challenge. Logistic, you don't have the logistics systems that you even have here today, right? Yeah. So we needed to build our own logistics company. We did that in Daraz and in Jumia, right? So you're not building only an e-commerce platform, you're actually building logistics company on top of that. And obviously that creates massive change. And then on the assortment, if you look at these countries, most of the assortment comes from abroad, mainly
assortment
China.
Means choice.
Yes, so products.
Products, yeah.
So there's a few products that are produced in Pakistan or in Nigeria at the time, but most of the stuff doesn't, right? So all these things obviously are massively complex. When you think about, for example, when we compare this to the West, in Europe, you had already a big assortment in brick and mortar, right? Before Amazon, I was able in Germany to buy a lot of stuff. You didn't have that in developing countries as much because the systems were not as in place. So when you then start e-commerce and you want to onboard 20 million products at some point, it's not changing only the world of online access, it changes literally the world of access. Someone in the north of Pakistan and Gilgit can now select between, 50 different fridges, which he wasn't able before, right? He drove to Gilgit and said, okay, what do you have? I need a fridge. And that kind of changes everything. And I think that's what's so fascinating about e-commerce in these areas, that you're not only saying, oh, we have offline and now we have online. No, you're actually completely changing the way of consuming. And I think the challenge, coming a bit to what is the challenge with the exit and where do they stand and why are they standing today where they are, is that I still feel that in these countries that we still need to figure out what is actually the right way of commerce. There's a company in Kenya, for example, Kapu, from former MD in Jumia, that works a bit differently, more on the social aspect of things. So different kind of way of actually selling products, maybe more the traditional way that it worked before, but doing it digital. So I still believe in a lot of countries we are not having figured out 100% how e-commerce works, right?
So that's why it's so expensive to build these companies.
Yeah.
That's why you're burning a lot of cash.
Yeah.
And that's why it comes to a point where no one wants to give you money.
And that's why also...
So either sell, shut down, or try to IPO.
Exactly. And Alibaba has the chance now, like they could say, okay, do we burn more with Daraz or do we shut them down? But it's very strategically important for China also. You have Pakistan, Bangladesh, Myanmar, Sri Lanka, Nepal, only with Daraz. 3 of them are bordering China. This is strategically important, obviously. And if Alibaba wouldn't do it, who would do it then? Who has that money to do that? So I think it's quite interesting because it's a very long-term game. Because at the end of the day, Pakistan alone has 200 million people, 160 million people in Bangladesh. I believe at some point you will find a model that works, and then you have a massive e-commerce market alone just in these 2 countries.
What is the model that works? I mean, I have Ronaldo Mushahwar coming in next week on the podcast. He's the co-founder of Souk, obviously, that became Amazon. So it's interesting because part of my questions to him are what is it gonna look like?
Yeah.
And now that you painted this picture in terms of how challenging it is to build these businesses in developing countries, so maybe there's a new model that needs to be unlocked. Maybe it's social commerce, maybe it's AI enabled. I mean,
I wish I would know, to be honest. I think it's...
So it's not just the technology cost, right? It's the whole infrastructure that you're talking about.
Yeah.
It's deliveries. Yeah. It's okay.
So the whole operational model, and also it starts with when you think about, for example, at Daraz and also Jumia, you're not dealing only with millions of customers. You have 10,000 or over 100,000 of sellers, right? You need to manage them literally. So you have sellers that sit there on their mobile phone selling products from wherever in Pakistan. That's a massive challenge in itself by just educating sellers to use the platform properly, marking out of stock, shipping on time. Like there's so many challenges that you can sort. You can solve a lot of things with tech, and Alibaba did this very smartly. So everything is kind of, Alibaba would say, like, you have that marketplace and that manages everything itself. You just need to put the rules and the tech in place. And if a good seller is at top, the algorithm will sort it out. Unfortunately, it's not that simple. It's a bit more complicated. But obviously, with 10,000 of sellers and millions of products and then millions of customers, it's very complex. And logistics obviously is a big topic. Payment is better now, a lot moved to online and card payment. But that's why the operational model to find for a country is definitely extremely complicated.
Okay, so final thoughts on this, on the IPO. I mean, okay, today it's a $600 million company. It's doing better than other companies that IPOed from the region. But, it's not like this sort of mega success. So
I'm not too close to the business anymore, but obviously what I see from the outside, there was a lot of structural changes they made. I think they try to obviously be even more localized now. I think that's one of the major strategies to see what model works and not. But I think one thing for me is clear, that the countries they're operating in, they need some sort of e-commerce. You also have nurtured now millions of customers to e-commerce. There will always be at some point some solution. If it will be Jumia or another solution, but there will be e-commerce, and it will be very hard to figure out the way it works. And it will take a lot of time and money to actually build that business.
Yeah.
But I believe strongly that there will be some sort of e-commerce in these countries. And Jumia is very, how can I say, is long enough on the ground to know enough about Africa and its individual countries, how to crack it at the end of the day.
I know it's a hard question, and I'm asking you this because as ecosystem builders and venture capitalists, and even what you're doing today with Antler, you're sort of seeding the next generation of companies. And one question that keeps coming up over and over is exits. We don't see these big exits. I mean, I know that there's talks about it. I know that probably we're going to have a few in Saudi Arabia potentially. How do you think about exits? I mean, you're investing at idea stage with Antler. So maybe actually before you answer that, sorry, you can tell us a little bit about Antler and how it works and what you're doing. And we can talk about like, how do you see exits?
So what we, and I think also in our discussion a little bit about like Rocket and my experience there, obviously what we strongly believe in Antler is that the team is the most important thing, and the founders are the most important thing in a company. Because at the end of the day, idea, yes and no, it is the execution, and it's the execution that is done by 2 or 3 founders and the team that they're building. This is the core of our belief. That's obviously also the experience that I had over time, that's what actually is a huge impact on or has a huge impact on the success and a potential exit of a company. So what we do in Antler, with Antler, is that we're a venture capital. We're the most active venture capital company in the world for early stage. 5 years old, originally from Singapore, and we have 26 locations worldwide where we run kind of the Antler model. What we do is that we're scouting, finding individuals that want to find their co-founders to start a business.
Which is a big challenge, by the way.
Which is the biggest challenge in the first place. And when we think about normally, like, what do you normally do when you start a business? I mean, you check in your friend circle, university circle, you ask some people, maybe you check a bit on LinkedIn. But when you think about literally the situation where you say, I want to start a business, I'm convinced. And how do you find that person? And how many people will you actually talk with? I wouldn't say interview, but like how many people will you really have an outreach to if you're not making a real exercise of like, let me literally recruit or find that person. So we have a program where for 3 months we do some marketing activities. We get applications from individual founders, or we also do practical outreach. So we're reaching out on LinkedIn, etc., to people where we believe they could be a potential co-founder and they might want to start a business, or we know they want to start a business. So for our last cohort, for example, that we had here in Dubai, we had 5,000 applicants from all over the world, mainly from the region. And out of these 5,000 people, we select 80. And these 80 people then join us in a 10-week physical program, which was here in Dubai. We have a cooperation with Dubai Future Foundation. So we were in the area 2071 with in the Emirates Towers. And then in these 10 weeks, what we do is we're giving them tools to kind of find the perfect co-founder. So there's obviously master classes and some activities and speed dating, etc. And then everyone needs to meet everyone. And then we see over 2-3 weeks that teams are forming and building. And then we switch kind of into a coaching mode. So my partner, Romain, and me, and then also some external venture partners that we have, we start coaching the teams. And then there's weekly coaching, weekly presentations, and it's mainly validation. So they start validating their ideas, and that goes then till the investment committee.
So when they come to the program, they don't necessarily have an idea.
No. So some come literally in the interview. So I, for example, for the last cohort, I interviewed myself 175 people.
Wow.
and you can imagine we have a big team. So we did over 1,000 interviews for the last cohort. So it's a very tedious process to get all these people. But some people have very clear ideas what they want to do. And some people say, I don't know, I have a tech background. I was a CTO here and there, and I want to build a business. I know some areas, but I don't know exactly what I want to build. So we literally have the whole bandwidth of
amazing.
No idea to I have a very clear idea. I will never do anything else than that.
So this would be great, by the way, just for the people who are listening. I mean, this would be great for people maybe who have just left their jobs in the corporate world, who are in between that maybe want to give it a try.
Yeah. So we see,
and they don't necessarily need to have an idea per se.
No, not at all.
And so they come in with an intention, and then you potentially pair them with. Actually, they choose who they want to pair with.
Exactly. So, for example, when we think about the people that we have 85% of the cohort have either way worked or founded startups, and over half of the people were already founders before. So we don't have people that, or the majority has some sort of touch points to startups, but we also have people that have no contact with startups. That was around 15%. The average work experience is around 14 years. It's nothing that we choose. It's literally the outcome of the people that we have chosen kind of for these.
So they're in their mid-30s.
Yes, that's, I would say, average age. Some people literally quit the job to join us. Some people have quit the job. Some people just failed with a startup, or they kind of left their job 2 months ago and now they're working on their idea, trying to find a co-founder. So there's different scenarios of people joining us, and we always try to have 40% tech people, 30% domain experts like banking or oil and gas or whatever, and then 30% business people. So we try to have a mix of people that we believe could be also a good mix of then founders. What we then normally see, obviously, in our teams that track out in our program, in our residency, it's always like a tech founder and someone else, and maybe a third founder. These are the typical teams. And when we look at the funnel, so out of the 80, we have now 23 teams. Most of them, I would say, will then present to us in IC. And in average, again, that's worldwide average Antler numbers, we're investing then out of 80 people into around 10 companies, which is around 25 people on average. So we're investing in way less than 1% of the people that apply to us at the end of the day. And I think the advantage for us as Antler is that we see these companies for 10 weeks. We work with them day and night. We observe them, the team. I coach them. So we have a very good understanding of the team dynamics. We obviously see sometimes teams breaking up. It's quite exciting and interesting what happens in these 10 weeks. But we have a very high confidence when we make the investment that this is a strong team that can solve all the problems that are coming their way.
Okay.
And then we invest a fixed 180,000 for 11%.
$180,000
USD, yeah, USD.
In cash.
In cash, yes.
Okay. Against 11%?
Against 11% equity on a safe note, so very simple. They incorporate the company, they own the company.
Okay.
That's kind of what the Antler model is.
Let's give people a cheat sheet.
Okay. How do you get my funding?
No, but like, what do you ask them? I mean, you said you're essentially meeting with individuals.
Yeah.
They don't have ideas, so you're not judging them by the merit of the market size or the idea itself or the business model.
Yeah.
So you're literally talking to a person.
Yeah.
And you spoke to 175 people.
Yeah.
And it's a very steep funnel.
Yeah.
So what do you ask them?
What do I ask them? I ask obviously always the same questions because that's how I can validate calibrate
you have like a
my answers.
Scoring.
No, there's no scoring. It's how can I say the funny part is, and maybe that's interesting to talk about. It's a lot gut feeling at the end of the day. Obviously, as we all know, gut feeling is a combination of a lot of things that happen in your brain. But of course, I think what's very important is like, why does that person actually want to start a company? What's the motivation to be an entrepreneur? What's the motivation to say, I want to be in that program? I mean, I sometimes ask that question, why do you do that to yourself? And I think that's quite interesting. We have these sessions before, it's called Ask Me Anything sessions, where there's always like around 80, 100 people in a room, and I'm presenting kind of how Antler actually works before the interview phase. And I talk about the program and what we do and how we do it. And there's always a small group of, 10% that's already dropping out at that stage because they realize that's maybe not the right thing for them. So one of the things obviously that I'm asking is like, why do you actually want to start a business? Why do you want to do this to you? Why do you want to be in a phase of your life for the next, 10 years? I mean, we need 7 years on average, I think, to build a unicorn. I think
it's more.
Yeah. So why do you want to do that?
Yeah.
And I think that's quite interesting to see already what comes out in questions there. Obviously, ask a bit about their background, what they have done so far, what they enjoy doing, what they want to build. And it's also interesting, second kind of important question is, when they have an idea, I want to talk about the idea, and I don't care so much actually what they want to build. I care way more about the way they talk about the idea and what is their thinking behind that, and why they believe that as a company that a VC should invest. I think, how can I say, there's a lot of people that believe that the Shark Tank ideas are always kind of the VC businesses. And it's actually not really always, or in maybe not in all the cases. We see a lot that people have ideas that are great, but I'm not sure if they are a VC case. So do you actually need venture capital? Because venture capital means fast and high growth, right? Rates. So, and I think that's, I think a lot that I see where people have good ideas for business, where I say, this is great. Why don't you find another kind of investment way of starting that?
I think we need. So I'm trying to create a lot of content, on that. Again, just to give examples to entrepreneurs about, high growth startups that could be VC backable and other like normal businesses. But I think it seems that there is a lot more support to entrepreneurs who want to build these type of high growth companies, but maybe not a lot of support to the entrepreneurs who are building like regular businesses.
I totally agree with that. But it's not only so I agree, first of all, that I think there's exciting businesses that would not be funded by a bank, but they are maybe also different than maybe a VC business. I'm not sure if people really have the awareness around that when they come with that idea, or if they just believe that is big enough, and maybe they're surprised of how big a business needs to be a success. So when we invest, so we have a $60 million fund here for the MENAP region, and obviously we're investing in potential unicorn founders. We need, I don't know, 2-3 unicorns.
So you need to believe in every investment that you make. You need to believe that this company could go to $1 billion.
Yes, we need to aim that high, otherwise it won't work. If we say that,
so that's the bar. So okay.
I think if we from the beginning would think about, that could be a 20 million case, then we will not achieve what we want to achieve, right? At the end, we're a venture capital company, and we need to return our fund in the best possible way to our LPs. So obviously we help founders. Our business model is a bit different than the traditional venture capital fund that just invests. But at the end of the day, we're a VC fund that needs to return. And yes, that's why we need to aim for the unicorn. And from a number perspective, so we will, over the next 4 to 5 years, we will invest in the region only with a MENAP fund and around 120 businesses that come out of our residency programs. And at the end, if you just look at the numbers, if you have 2 unicorns, that could be already a massive success for the fund. And that's how hard it is to actually build such companies at the end, and how many people will fail on the way. After we invested, we help the founders literally incorporating their businesses and all the mistakes you can do, and that I did when I built my businesses, to get ready also for fundraising, get ready to finalize the MVP. So some people finalize the MVP, some are still finalizing the MVP, and whatever support they need in the ecosystem, potential investors, and getting just ready for that next steps. We coach them, support them. I have calls with them in the beginning every 2 weeks. For me, and I think it's also my personal conviction why I love Antler and why I'm loving this mission, because I feel like I'm part of all these companies somehow. Maybe there's
a bit of you in every one of them.
Yeah, so it's obviously me not in the driver's seat, but at least I can see other people on their journey, which obviously excites me massively. So that's why I try to give as much experience to these founders. So we're very close in that phase after the investment. And obviously, when you think about us as fund, we do the first check, but we will do with the Antler Fund also the pro rata into the seed and the Series A.
So you will continue to invest.
We continue to invest
as they keep fundraising.
Yeah, so they need to fundraise external capital, but if they find external capital, we do our pro rata right in the seed and in the Series A. And then there is a global Antler Fund, a $285 million Elevate fund, that then will continue in Series A, Series B, and Series C. In a few years, when our companies are at that stage, Antler will also have a growth fund that then finances till IPO. We will not be the lead investor, so we do the lead in the beginning, and then the companies need to raise external capital, but Antler can really fund you from day zero to IPO. That's the idea.
Okay, so just to clarify some terminology, when you say building the MVP, which is basically that minimum viable product, which is the first product that they can ship.
Yeah.
IC is an investment committee, which is a group of people that make decision on whether you need to invest in a company or not. What happens when you don't invest in a company?
Very good question.
That sends a pretty negative signal, no?
I don't think so. I get that question a lot. And obviously in that investment committee, as I mentioned, we will have around maybe 20 companies. We will invest in around maybe 10. Most of the companies that we not invest in, we see actually breaking up afterwards, or the teams are breaking up, which is sad, but it's also a good sign that we were maybe had the right idea here, what we're dealing with. And then we have sometimes companies, as I said, one or two that try to raise money somewhere else. And I always say that also to the founders, that at the end of the day, if you get a rejection from Antler, it doesn't mean that you are on the wrong path. It just means that we believe it doesn't work. And we are just one out of many. And I mean, as a founder, especially not only with or without Antler, but even afterwards, if we invest in, you need to talk with, 100 investors to get maybe 5, right?
Yeah.
That's your life as an entrepreneur. And that's why I motivate everyone that is not having a positive outcome of our investment committee, that if you believe that this is the perfect team, and if you believe this is the right idea, I motivate everyone to continue, stay in contact with us. Maybe we have the chance to invest at a later stage, but I don't believe per se that it's like a negative thing, because that happens to every entrepreneur at the end of the day. So we see different kind of outcomes either way than team breakup. And we see also some of the founders that don't get the investment, they join other startups of our portfolio, funny enough, as a employee number one, or they find other co-founders also outside of the cohort. Obviously also in the 80 people, not everyone finds their perfect match, which is also very normal. Like there are situations where there's a really great founder and he just doesn't find the right co-founder in our residency, and then the person will maybe find someone outside, and we stay most of the time in contact with the people. There's always a chance, obviously, to come to us and raise funds also at a later stage.
Can you share some, I don't know, do you have any interesting stories in terms of people forming together as a team, or are there any observations?
It's interesting because we always tell every founder that joins us to say that it's very important to meet every founder in the program. So we have 80 people, and I say, please meet all the 79.
That's a lot of people.
It's a lot, yeah. And we always say, like, it's not just the quick coffee, right? How do you define that this is the person you want to spend the next 10 years of your life with, right? The dynamics in our residency are extremely exciting. We have 36 different nationalities on top, right? So it's not only characteristics of the people, it's also different kind of cultural backgrounds that are literally clashing in that room. And I think there's interesting stories, and obviously sometimes, as I said, also like
I can imagine like 2 people or 3 people fighting on one person, for example.
Yeah. Oh, yeah.
Let's say a seriously talented tech person,
We had exactly that in our last cohort. We had an extreme talented tech person that worked in 2 startups here in the region, very successful startups, as head of engineering. And you can imagine he was obviously
in demand.
And he almost needed to choose. And he said, I'm not good at saying no to people. And it's very much like dating a little bit for your co-founder role. So, and what is also exciting, then we have teams that form in week 2, maybe they continue and they really start working with each other, work on the idea. And then 1 week before IC, so the investment committee, they break up. And we just had that literally this week. And at the end of the day, it's something good, because it's better that it happens now, them working very, very closely with each other, being also obviously really tested from our side and challenged, and then realizing it doesn't work. And I think it's better to find that out now than 6 months down the line when things are already a bit more complicated.
So what is, bad advice that usually founders get or potential founders get? Is there, like, do they come with some preconceived notions and you think, oh my God, that's really bad advice?
I'm not sure what advice they get, but what we see sometimes, that people still believe that an idea has a massive, massive value. I think that's the major thing that I observe, especially when someone comes in that has an idea, and the idea might even be already quite developed, and and he looks for a co-founder, and then he has the feeling that he or she is already way further in the process, and actually the business is already half done. And that, I think, is something that we try to explain, that the time to IPO or the time to the unicorn is a long time. It's a long journey, and the execution of that is so much more important at the end of the day. And I think that's something we see quite a lot. And what we also see, by the way, obviously, when we start investing in companies, how quickly sometimes companies need to pivot, and that just shows how not important the idea at the end of the day is. It is that the team is flexible to pivot and then to execute and find an idea that works with them, for them, that they can build. So that's something we see quite a lot. People are very focused on idea, not everyone, but and give more value to that idea than the team and the team that needs to execute.
Maybe also in terms of how they split the equity between them, right?
That is then a consequence of what I just described.
Yeah. So I came with the idea, I get an extra 20% in the business.
Yes. Yeah. And I think this is where we give a lot of insights and experience that we all have, and on our external venture partners that they have, and that helps them. Then we have these founder questions, these 50 founder questions that they need to answer individually before they decide to become a team. So before they come to us and say we want to check out, they need to fill 50 founder questions, and sometimes these questions are not very comfortable, and we force them to answer
Example?
them. When do you want to exit your company? How many hours do you want to work per week? And they're very simple questions, but funny enough, these are the questions that people love to avoid talking with each other about it. Like, do you want to do vacation in the first year? How do you think about weekends? And do you want to sell, if we get an offer for 50 million, will you sell immediately, or do you stay for the mission and you want to build a unicorn, or you actually don't care about when the exit comes, you care about what you like? There's so many things that are kind of obvious somehow, but people avoid these questions.
These are great questions, by the way. I mean, weekends, holidays, I guess no one talks about these things, but these things are so important.
Yeah, and people avoid them and say, we want to go there. But these very practical things are unfortunately sometimes the things where also teams are breaking.
Yeah.
Because it's like, I work way more than you and whatever. Like, there's still the possibility that a team breaks up, but we challenge them quite a lot in these 10 weeks to have a way higher percentage of them not breaking up.
So you invest in all sorts of different ideas, or they come up with different ideas. It could be, it doesn't need to be a fintech, or it doesn't need to be like what is sexy today, right? I mean, you are open to different ideas and different businesses.
Yeah, so we're investing sector agnostic. Everything that we believe kind of works. And again, the investment thesis starts with, is that a great team? Do we believe in that team? We have situations where there might be a good idea, but the team really doesn't convince us, we will not invest. If we have a team that is really, really great, and the idea is good and works, because obviously we worked a lot on that, but might not be 100% perfect yet, we will invest. That's kind of how we go about that. And obviously there's masterclasses and there's a lot of coaching also from external venture partners that help a little bit on navigating through that validation phase, so that we're not ending up with like very, how can I say, like non-validated ideas. So in the 10 weeks, they need to do quite a lot of work to be able to validate the ideas, so that we have a good confidence also obviously on the general concept of what they want to build.
Can you maybe tell us about a few exciting different projects that are currently being built? Because you have a cohort now.
Yeah.
So what is really cool?
there's many things that are very cool.
Give us two.
Give us two.
Yeah.
I can maybe talk about the last program where we have invested already. We have already 13 portfolio companies from the last program. And obviously what we see a lot is there is a link to AI. We see this a lot. Obviously, we make sure it's not just the buzzword and it's a real good business. Obviously, there's a company called TrueBuild, for example, in the property space. They're in Saudi right now, and they're building something very exciting. And there's a good example. We have one of the founders. He's a domain expert, and the other founder is a machine learning tech guy. And people that have domain expertise, they come with real problems, and that's always very helpful. That the search for the problem is like a very small process or very short process, and they come with something that they have experience in their 10-year work experience, and that is very helpful because the validation on the problem at least is already done quite nicely. I think in the region, I think we have the best region right now to start companies. We have a combination of a very young market that is developing extremely fast, is thriving. We have governments that are extremely supportive of the ecosystem, building companies, building new industries, developing the ecosystem. And I think what we need a bit is patience. I think we're not very good at it. I'm not very good at it, but I think we're moving extremely fast. And I think there is a lot of things that we will see coming up in the next couple of years. And we obviously, otherwise we wouldn't have started here in the first place, are very much convinced that we can invest in companies here that will be very successful. And I think when we think about the region and the ecosystem of the startups that we want to invest, I would say 80%, 85% of the startups that we're investing today are companies that have MENA as a market directly. And I think what's here quite interesting is that we're finally reached that stage where it's not just we take a model that worked somewhere else and then we're applying it to the region. I think we're now reaching the stage where we're developing our own models, our own business models that are uniquely from here and for the region. And then we have also 15%, I would say roughly, let's see how that goes over the next couple of years, where we have companies that we're investing now that are actually already for the global market. And they see some sort of advantage why to be here in the region, regulation, for example, Web3, etc., where they say this is a very good, exciting region to be in with my company, even though I build a global product. And I think that's very new, and I think that's very exciting to see. So I think the MENA region is not only exciting from a perspective of building for that market here, but also building something for the global market out of the region. We see both happening. It's a very promising what we see in the last couple of years.
What keeps you up? I mean, what are some of the challenges that you personally face running Antler today and looking ahead a little bit?
So when we think about the investment cycle, so we're doing kind of that first check. We see the VC space that then starts early stage.
So you're doing the $180,000, which is basically the first money into this company.
Exactly.
This is what we call pre-seed or
exactly. So this is the first check.
So you're giving them that first check.
Yeah.
And then the next check is the $500,000 maybe.
Yeah, then that's where the challenge starts. So we have a very good VC space where it's a $500,000, $1 million, these kind of tickets that we normally then see seed stage. We have here in the region quite a good setup. There is a bit of a gap in between where I feel there needs to be still more funding, where we normally see then our companies either raising from angel investors or some smaller funds that also write like $150,000, $250,000, $300,000 ticket. So sometimes the companies, they need that in between a little bit. Depends very much on the company, their fundraising, etc. But here I would say there's a little bit of a gap still where we need to hopefully get more funds into the region, more angel investors, more family offices that invest also at that stage. Then I think Series A, Series B, this is again where Series B, C, where I also feel would be great to have more funds in the region. So I think the startups that we're investing with the first check, that there is also more capital available throughout the funding phase. And I think that's what we're very excited. We see the signals. We talked about Asia, etc. So there is more funds now that come into these areas so that the startup is really able to raise funds whenever they require it. And that's very normal. We're in a very young ecosystem here, especially when it comes to startups. We had last year $4 billion in startup investment. So we're still in the very beginning. And obviously Antler, we are helping to build that ecosystem with that kind of first check and follow on. And we're hoping that more funds and coming to the region, helping our startups to thrive.
Okay. Is there an ideal sort of founder profile that you look for?
Yeah. Obviously, what we see purely from the statistics is that founders that have founded businesses already before, either way, successful or unsuccessful, that's almost irrelevant as long as they take the learnings out of it. Obviously, they have it a bit easier when they start their second or third. So we see teams that are building with ex-founders, that is always a bit easier for them to start a business than first-time founders.
They know what they're getting into.
They know what they're getting into. They know maybe the typical mistakes that they shouldn't do.
Yeah.
But it doesn't mean that the ones that haven't started a company cannot be successful. We see also first-time founders that can build very successful companies.
Yeah.
But for us, that's definitely always very exciting to see founders that come in that have been already founders before and that clearly see Antler as that model where you find your perfect co-founder. And it's funny because we have sometimes founders that come in, they start a business before and they had actually a bad experience with a co-founder. So they say, I will never start a company again if I don't find that perfect person.
Okay. So we're going to end with a game.
With a game?
Yeah.
Oh, wow. I'm excited.
I'm going to ask you to pick between two choices.
Okay.
Okay. And it's 6 questions. Just give me your answer.
Okay.
Okay. So you said that you are an ice hockey player.
That's correct.
Do you prefer to play offense or defense?
Offense.
With a baby on the way, would you rather read a book or sing a lullaby?
Read a book.
Read a book? Okay. Would you rather go through an IPO or an acquisition?
Acquisition.
Would you rather be an entrepreneur or an investor?
Oh, the hardest one at the end. Since you're asking me now, investor.
When investing, would you put more weight on the idea or the timing?
The timing.
Okay. If you had the option to time travel, would you go past or future?
Future.
Cool. Well, thank you so much.
Thank you very much.
Thank you. I really enjoyed it.
Thank you very much.
And good luck with Antler. It's super exciting. I love what you're building.
Thank you very much.
Thank you so much for tuning into this episode of Conversations with Loulou with Jonathan Doerr. I hope you found it insightful. If you want to learn more about Antler, make sure you visit Antler, that's antler.co, which is CO. Also, don't forget to check out conversationswithloulou.com to listen to all the other episodes. If you are enjoying the show, make sure you hit that subscribe button on Apple Podcasts, on Spotify and YouTube, or wherever you listen to this podcast. Also, make sure to leave us a rating and a review. I really enjoy reading these reviews and I really appreciate them. Thank you so much and see you in a few weeks.